What's going on, everybody? Thank you so much for checking in. In this video, we're going to talk about SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, Amazon, AMD, Nvidia, and Meta. We're going to talk about these charts on the long term and on the short term candles. That way we get an idea of where the overall macro picture is trading and what's happening on the micro picture. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY last week did a good job of recovering back above the 10 and 20-day moving averages, which are these blue and purple line. Now, the significance of these blue and purple line, or the 10 and 20-day moving averages, comes from the fact that ever since we recovered back above them in the beginning of November, we have been using them as a support throughout this entire multi-month rally. Now, when we broke below those levels, the bears or the sellers had a chance to take SPY down. However, you can see that buyers were very aggressive and they bought SPY right back up. However, they still weren't able to get a clean breakout over its 52-week highs, and it closed right around that level. So what does this mean for SPY this week, and what does it mean for the overall market? Well, that really depends on a few things. Last week, we had the CPI report, which was the consumer price index that measures inflation. You can see that inflation saw an uptick from 3.1 to 3.4% on the consumer side. Now, to make things even more uncertain, the very next day, we had the PPI report, which is the producer price index. It measures inflation from the producer side. And you can see that it actually showed that inflation went down by 0.1%. So the uncertainty and the mixed information did not really help markets move much higher or lower, which is why SPY kind of stayed sideways all day and many stocks did not make much movements. Now, to top it all off, we also had bank earnings, and the bank earnings were very mixed. JP Morgan's profits fell, and they cited last year's buyout as the culprit, and most stocks closed lower on Friday as traders sold shares, fearing that falling rates in 2024 will send bank profits lower. Now remember, banks are the backbone of our economy, so it's important for banks to be doing well. They didn't suffer too bad on earnings, but we will have more bank earnings this week that can clear things up and maybe send some more certainty throughout the market. Apart from more earnings this week from the bank sector, we also have multiple Fed speaking. So we have the Fed speaking as early as Tuesday, Wednesday, Thursday, and Friday. Anytime the Fed speak, the market tends to get a little uncertain, so keep that in mind when you are positioning. There are many other notable economic reports this week apart from the US retail sales earnings, which is going to be on Wednesday. So keep that in mind, especially if you're trading any retail stocks like Target, Costco, GPS or Gap or Walmart or anything of that sort. So now that we know what's happening on the economic front and on the economic side, let's talk about SPY on the shorter term candles. As we already mentioned, SPY would try to break above the 52-week highs last week, but it failed and it closed just below them, which means that the highest point we reached last week, or the rejection point we reach, is going to be our resistance to focus on to start off this week. And that's going to be at 478.67. If we break above that point, then we do expect SPY to move towards its all-time highs, which is around 480. And if it breaks above 480, it is likely going to rally further. But just keep in mind that we are noticing weakness in the relative strength on the RSI. So this is what we call a negative divergence. And you can see that here when SPY made this top, its RSI was quite strong. That means there was a lot of relative strength. But now that we are trading right around those same highs, you can see that there's a lot less relative strength and there's almost no green on the MACD histogram, which is an alarming sign. One thing that we noticed last week is there was a little bit of buying in oil stocks. So we can see there was a little bit of jump on Friday, which was the energy sector. And anytime energy rallies, we usually see tech stocks pull back. So keep that in mind. Very soon we may see a capital rotation between the tech sector and the energy sector. We are looking out for that in our premium group, and we will be playing it as it develops further. So now that we've covered SPY on the bullish side, let's talk about the bearish side. SPY has a long way to go before it enters a bullish direction. However, if you remember from our last video, we talked about this breakout. From our last video, none of this had happened already. We had only made this green line right here, or this trend line, and we talked about this breakout and we talked about the bounce that would happen last week. Now that we're experiencing this bounce, it's very important that SPY stays above this level, because if it breaks below, you can see that it will break below right around where this green line will meet this red zone. And so if it breaks below that red zone, we expect SPY to free fall towards 457. Now, this is a pretty aggressive downside price target, so keep that in mind. We will be updating these levels for you in later videos, so make sure you check back in or subscribe if you haven't already done so. That way you see where we update our levels too. This is a very aggressive target, so for now, to start off your week, make sure you stick to these supports to start. The next stock on our watch list is going to be Tesla. Now for Tesla, we talked about Tesla's weakness, especially on this breakout attempt. We talked about Tesla potentially failing this breakout attempt and moving back below all these moving averages. So SPY is currently trading above all of its healthy moving averages, while Tesla is trading below all of its healthy moving averages, which is a bad sign. And you can see the 10 is starting to cross over the 50, which could be a very, very negative and bearish sign for Tesla. So now that Tesla is at these lows, let's talk about some levels on the shorter term candles. And we actually didn't even update our levels because we wanted to show you how this played out from our last update. So when our last update happened, this was right around this point, and we talked about a resistance at 242.80, and we talked about a support right around 235. Now, ever since then, which was our update right around here, you can see that Tesla fell below that 235 support and it struggled to get back above it. Remember that anytime it breaks below a support or any stock breaks below a support, that support automatically turns into a resistance, which you can clearly see there was a lot of rejection right here, which makes this a resistance point. Once again, Tesla moved lower towards our red zone, and you can see that Tesla tried to bounce at that 226.30 support, but it failed and it gapped below the very next day, which makes this point another resistance point where we need to switch. So that means the very next available support for Tesla is going to be right around 211, and if we look even closer, we can use Friday's lows as a support, which was right around 217.15. So we're going to go ahead and place a support right around 217.15 for Tesla. So if you're starting off your week, that means 217.15 is going to be the very first support to pay attention to, and the downside price target is going to be right around 211 after that. The next stock on our watch list is going to be Apple. Now, like SPY, Apple moved sideways for the majority of the week last week. In fact, Apple's action or price action has been so uncertain lately that Microsoft overtook it in terms of market cap, and it is now the most valuable company in the world. So let's take a look at Apple on the daily candles, where we can see that Apple barely recovered back above its 10-day moving average last week, but it wasn't a strong enough recovery to suggest that this is a full-on reversal. So far, Apple is very much trading near the lows of its gap down from the beginning of the year, and buyers can easily step back in as soon as a little bit of selling action happens in tech stocks. So since Apple is trading right at its 10-day moving average and right above its 100-day moving average, the first thing you should do every morning is go to that daily chart and see where did that daily candle open in relation to the 10-day moving average and the 100-day moving average. And you also should see where it closed. So after the day is over, take a look at to see where that daily candle closed, because if it gaps and closes below the 10-day moving average, it could mean that Apple is going to head lower. Now, if you're not a moving average trader, here are some levels to focus on for Apple on the shorter term charts. First, you have a resistance right around 187.40 to focus on first, but even if Apple recovers back above that level, buyers are not going to be comfortable until Apple is at least back above 192, better yet 195.45. Remember, Apple is suffering from falling sales and people are still scared. A lot of people don't believe that the Vision Pro is going to be the product that saves Apple from its falling sales. So keep that in mind when you are trading Apple. It is leaning more bearish than bullish right now. To the downside, Apple has a support at 183.15, and below that point, it has another support at 178. Below 178, things can get pretty ugly pretty quickly, and it can fall towards 173.30. Again, remember, these are pretty aggressive price targets, so make sure you're checking back in so we can update them for you in later videos. The next stock on our watch list is going to be Amazon. Amazon is doing a great job at holding above its 10 and 20-day moving averages after it fell below them and recovered at the 50-day moving average. But you can see that on its breakout attempt, like many other stocks right now, it failed and it closed just near those 52-week highs, which means right now it can go one of two ways. If it breaks this breakout attempt, then it will continue moving on. It is very unlikely that it will attempt again and fail. But if it fails, here are some levels to focus on, and a failure at these highs is going to be very, very risky. So first of all, we have a resistance at 158.60, and we don't need this resistance anymore because you can see that Amazon already made this attempt above it. To the downside, we have a support at 150. 0.55, so we have that support at 150.55 for Amazon. So anything above this level we're going to consider bullish. So we're going to go ahead and highlight these levels right here. And we no longer need this. So this is going to be our range for Amazon. It's a little bit of a big range, so if you do want to add another support right around 153, you can also do that. So Amazon can consolidate within this range, and you can place a stop loss right here or right here if you are looking to trade it in a bullish direction. To the downside, it has a support right around that 147.40 mark. So we have a support level there, and then we have our other two supports here. So if it breaks below 147.40, Amazon is not really expected to stop until right around 140. So you can play a put position or a short position below that 147.40 mark. The next stock on our watch list is going to be AMD, which seemed to be making lower highs and lower lows for the majority of the second half of the week last week. So let's go ahead and take a look at what's happening on AMD on the shorter term charts. We can see that AMD is potentially holding this breakout. There was a strong rejection point here back in December. You can see that it attempted the breakout, failed, and then buyers were quickly to buy it back up. So as long as it's above this level of 143.70, we are leaning bullish on AMD. However, buyers need a breakout above 152.50 for continuation. To the downside, AMD doesn't really have much of a support below 143.70, so you can potentially take a short or a put position below 143.70 as a day trade, but we don't recommend swinging any puts unless AMD is trading below 126.70. That's when we would consider swinging puts towards 116 to 118. The next stock on our watch list is going to be Nvidia, which made another new high last week, not to our surprise. Nvidia is doing a fantastic job of keeping its strength right now. It is one of the strongest stocks on the market. Let's talk about its short-term candles. We have a support at 535.75 and another support at 527.70. It's not really going to get bearish for Nvidia unless it breaks below 508.80, which happens to be its breakout right here. So this was the highest point it made before it broke back above it, and so buyers need to see it hold that level in order for it to continue this upside move. I wouldn't be surprised if Nvidia continues moving without that retest, but if it does retest, that is even more of a reinforcing thing if it bounces at 508.80, and it will likely continue for the next quarter. The next stock on our watch list is going to be Meta, which made another 52-week high last week. Here are the levels to focus on for Meta. We are bullish on Meta as long as it is above 363. Notice that Meta's highest point was right around this 362 level or 363 level. It broke above it, retested, and it bounced. So that retest is a reinforcing factor to the breakout. And if it breaks below 363, then Meta is likely going to be in trouble for the week ahead. Our bearish position would be started below 355.25, and so if it closes or breaks below this level, then we would be comfortable swinging puts towards 340. But as long as it's above 363, we are bullish. The next breakout level is going to be 377.10, and our price target above that is going to be 384 to 385. So that's all we have for you guys. Don't forget to subscribe and like, and best of luck for the week ahead.